makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter. And here's what's coming up on today's program. The record run continues for global markets. Japan's Nikkei 225 tops 40,000 for the first time after another all-time high on Wall Street. Testimony from Fed Chair Jay Powell is in focus for investors this week. China set to unveil targets and strategies for reviving the economy at the nation's top political annual gathering. Beijing scraps the premier's press briefing, breaking 3 decades of convention. Plus, the U.S. says Israel has essentially agreed to a 6-week ceasefire if Hamas releases vulnerable hostages, while American and Jordanian planes start dropping aid into Gaza. Now, also coming up this hour, we'll bring you top guests across a range of sectors. We're speaking to Citigroup Chief Client Officer David Livingstone. He joins us shortly. Plus, we'll also speak to the Chief Executive of Zoetis, the world's largest producer of pet medication, and also the chairman of the Italian coffee company illycaffe. But first thing is first, so let's look at European markets, and they may give us an indication of what's coming up ahead. Now, we do have a very busy week in terms of central banks. Also, data coming out of the U.S. and new forecast from the European or the Eurozone that could give Madame Lagarde an impetus to say that the next move is down, but also wait for wage growth to see exactly the timing of that. Now, global markets overall, we're on a tear. So for the moment, you can see European markets actually are pausing after this record high after 6 weeks of gains. Global markets set for fresh records. Again, we were saying the Nikkei 225 closing above 40,000. For the first time. Now, it comes at the start of a big week, which includes China's NPC, the Fed chair's testimony, the ECB actually forecast, and a UK budget. Now, joining us is our very own Justina Lee, our markets reporter. Justina, there's quite a lot going on this week. I think it all has to do with these record high equities. I don't know what will support them going forward, but I know on Friday, Bank of America was just the latest one to say, look, they can go 5% higher from that record close on Friday. Like, what will support markets?
Yeah, it really is pretty incredible. I mean, in the U.S., I think in Japan, there's sort of like 2 different versions of the Goldilocks narrative. And I think last week, kind of very notably in the U.S., the core PCE number was like, I think was something that the investors were comfortable with, that maybe the Fed doesn't need to be a lot more hawkish. And it was notable that, the S&P keeps going up. Bitcoin kind of kept going up as well. Carvana was up, Beyond Meat was up. So it does feel like, there's like it's like at the peak of the party right there, like around midnight. And in Japan, we're kind of seeing the same, where we first saw the foreign investors rush in, because the yen was weak and maybe inflation is picking up, corporate profits were picking up. But at the same time, the BOJ was going slow. And I think it's notable that now we're seeing more local investors come in as well. There was a securities kind of brokerage app that actually crashed. And I think that's always, a telltale sign.
But Justina, when you look at some of the supports, is it just because money needs to go somewhere and because bonds are a little bit tricky at the moment? Or is there underlying strength, for example, in some of the earnings stories that we've seen, but also fundamentals in the economy getting better?
Yeah, I think in Japan and the U.S., you definitely see kind of corporate profits also supporting that bullish stance, right? Especially in the U.S., where kind of even after a few strong years, you still saw pretty strong corporate earnings growth. Now, a lot of that was concentrated in the tech space, and I think that kind of explains why, NVIDIA is still going up. But at the end of the day, on an index level, the U.S. index is very tech-driven. And you can talk about concentration all you want, but kind of for anyone who's just investing in the benchmark, that's been good news so far.
Where are you finding the most interesting stories? I know this week is going to be very weak, a big week because we have the Jay Powell testimony, but also we have new forecasts from the ECB. So it could guide the ECB to say, look, we're going to get a cut. Let's look for wage growth to see what happens, when the timing of that is.
Yeah, it's kind of interesting because with the U.S. economy, there have been some signs that it might even be reaccelerating. So actually last week we had kind of Apollo's economist saying that maybe the Fed, there will be no rate cuts this year at all. And I think that will be a surprise to markets. This week we're getting kind of Powell's testimony to Congress, as well as kind of the jobs growth number on Friday. And I think that will be kind of a clear indication of whether there is that much evidence behind the reacceleration thesis.
And Justina, then a lot of focus, of course, on fiscal policy with the budget here on Wednesday.
Yeah, I think so. And it kind of both kind of here as well as in China. I think here where people are also looking to see whether there are kind of like more policies to support the listings in the UK market and the financial market in particular after all the concerns about a lot of companies kind of not listing in the UK and the market just generally shrinking.
Is there anything else that you're looking forward to? I mean, we've avoided a shutdown in the US, so that's a good thing. Does it go back to auctions, for example, of Treasury as the main focus?
Yeah, I think that's one. And another big one will be kind of the targets coming out of China. I mean, economists are expecting the targets to stay roughly the same, 5% GDP target, but also not necessarily like a bazooka-style stimulus, as JP Morgan economists said. But I think people will be looking for comments around how China plans to kind of support consumption, for instance, and achieve what they call like high-quality growth instead of kind of the old export-driven model.
So, Justina, we have a lot of the big speeches tomorrow. What are you looking out for? Is it the property sector? Is it just more, in general, more policies to support that growth in China?
Yeah, because I think when we look at the stock market so far, I mean, a lot of the support measures have been kind of like cosmetic. They're more about sort of like stopping people from selling stocks. So I think people really are looking for more kind of like structural support. So that will be around the property market. It will be around how they're going to encourage people to kind of buy more appliances. It will also be around, how they plan to support particular like key industries such as electric vehicles and batteries and renewable energy, kind of amid this like deteriorating relations with the U.S.
Justina, thank you so much. Our Bloomberg Markets reporter there, Justina Lee. Now, we're also looking at pre-market Ark House Management and Brigade Capital Management having boosted their offer for Macy's by 14% after the retail rebuffed a previous proposal. Macy's in January rejected the bid from the investor group, saying the offer lacked compelling value. And the company has instead unveiled a restructuring that includes plans to close almost a third of its U.S. locations while growing its Bloomingdale's and Bluemercury brands. Coming up, the U.S. Vice President Kamala Harris joins calls for a temporary ceasefire in Gaza. We'll look at the latest on negotiations next, and this is Bloomberg. Now, the U.S. says Israel has effectively agreed to a 6-week ceasefire in exchange for vulnerable hostages being held in Gaza. Now, Hamas officials are now heading to Cairo to outline their positions. Now, Rosalind Matheson, Bloomberg's EMEA news director, joins us now. Rosalind, these things could actually turn quite quickly, so it's unclear at the moment whether the optimism that the U.S. has really put on a ceasefire will come to fruition.
Well, that's right. We know that Israel has agreed, the U.S. says, to the broad terms of a ceasefire, but that still has to be presented to Hamas. Hamas has to agree. And what we're hearing, of course, is that Hamas officials are still going to Cairo for conversations. Will Israel turn up for those conversations? They refused to do so before. They want to negotiate through intermediaries like Qatar and Egypt. We also know that there are a lot of outstanding issues before they even agree to the terms of a ceasefire. So these are the terms to agree to the terms of a ceasefire, and that includes things around the conditions of the hostages, their whereabouts, their names, which of the hostages are still alive. These are the Israeli hostages being held inside Gaza, and their condition, how healthy are they? And Israel wants all of that before they agree to actually sit down to discuss a proper ceasefire. Hamas is saying other things. They want understandings about whether they can move their troops back into north of Gaza, for example. So it's possible all of this could still fall apart.
Ros, how much pressure is there actually from the U.S.? I mean, we heard the vice president's tone change in, calling for a ceasefire, and also the U.S. saying that they're going to send, air aids.
Well, that's right. What you're seeing, the tone from the US is increasingly one of exasperation, frustration, both publicly and behind the scenes with Israel. That's, of course, over the humanitarian situation inside Gaza, and making the political point as well of saying we know that Jordan and other nations have been doing airdrops of aid in recent weeks. The US is now doing them directly, and that's expressing direct concern about what's happening inside Gaza. You can see the tone from Kamala Harris, from Joe Biden in recent weeks. The reality, though, is Israel says that they feel that they have to do this course. They feel they need to do what they say is necessary to eradicate Hamas. They've given a deadline for the exchange of for their hostages to come back to avoid an offensive in Rafah in the south of Gaza. That's what everybody is very concerned about. So regardless of the pressure from the US, the UK, Europe, whoever, Israel says they have to push forward with this.
Roz, there's also an Israeli cabinet member who's going actually to the White House. How significant is that?
Well, it's interesting to see Benny Gantz, who's a member of the War Cabinet, going to the US potentially for these conversations. He's much more of a centrist than Benjamin Netanyahu. They've clashed often politically at home. They've been political opponents over the years. They are in the War Cabinet together, and obviously under the terms of the War Cabinet, they all have to agree, for example, to start an offensive in Rafah. So the US is probably hoping they can peel Benny Gantz off a bit and get him to pause or to urge, for a stay in that offensive. Whether that's going to be successful remains to be seen. But again, it does show that the US is trying everything it can here to try and stave Israel off.
Ross, thank you so much. As always, Ross Matheson there, who heads our EMEA news desk. Now, coming up, the UK Chancellor Jeremy Hunt considers his tax-cutting options in Wednesday's budget. We'll be discussing all of that and much more with David Livingstone, the Chief Client Officer at Citigroup. That's next, and this is Bloomberg. Well, my next guest is Chief Client Officer at Citigroup, a new position which the bank created late last year. Under his previous role as Chief Executive in EMEA, he helped the bank to navigate the pandemic and also led the firm's response to the Russian invasion of Ukraine and sanctions against Moscow. Now, he's a member of the company's executive management team as the Wall Street giant oversees its biggest restructuring in 2 decades. Well, David Livingstone joins us to discuss the UK budget and much more. David, thank you so much for joining us. I know you've been extremely busy over the last couple of years, frankly, with the restructuring, but also with the difficulties that a lot of financial banks have found themselves in. Are you seeing green shoots for deals and anything in the pipeline?
Well, if you're talking about that sort of capital markets and M&A activity, yes, we are. If you look at the beginning of this year, it's been a very, very busy period, particularly in debt capital markets, as treasurers have taken the opportunity of a bit more clarity on interest rates to fund and take advantage of liquidity. And M&A, I think, is, after 10 quarters or so of muted activity after the boom of 2021, I think there are green shoots because there's more confidence as corporate leaders look forward and say we can see a path of where inflation and where interest rates will go and perhaps where growth will be.
Are you surprised that actually we haven't seen any more casualties because of the higher interest rates?
Well, you need to remember that interest rates are higher but not high, and therefore, in historical terms. And therefore, the ability to manage it really rather depends on how extremely leveraged you were going into this period of raising interest rates. And there's a period of being able to manage through that, particularly taking advantage of, people have a lot of hedging in place and other things. So, no, we haven't been sort of surprised, but we've been, I suppose, positively attuned to the resilience in the markets.
David, when you speak to clients and you travel around the world to speak to Citi clients, because of the big restructuring that your chief executive and yourself have put in place, what's the question you get asked the most?
I'll change one word. It's a reorganization, not a restructuring. Okay. And that's important because really what Jane Fraser has led is what we announced in September is having our structure catch up with our strategy. Our strategy remains the same. We are the world's most international banking organisation, and that remains absolutely the case. But our structure didn't fit the profile of what we wanted to be now, so we've simplified, taken out layers, and put a much greater emphasis, and hence my new role, on delivery to clients.
I know last week was, you were the talk of the town with the fact that you actually have Viz joining from JP Morgan.
Yep.
How will that change things at the bank?
We're very excited about Viz joining. I mean, he's an excellent banker. I'm sure you know him. He's very well respected by clients and for his market insight and judgment. Our banking business is a very significant business for us, and Viz will be in charge of our investment banking, corporate banking, commercial banking activities. And I think it is a statement of our ambition in all of those areas to have someone of Viz's quality and stature. He's attracted by the globality of Citi. He's attracted by the story of what we can do and how we can do more for clients.
Do you know where he'll be based yet? And does that give a signal on where also Citi wants to focus on?
Hopefully on an aeroplane, I think will be Viz's mandate. He will, very international by not only his background but also the business need.
I know you've also bet on Canary Wharf, right, as something that will do quite well in the coming years. Is that an attractive place to be?
I think so. I mean, I think the Canary Wharf Group and Shobi Khan are doing an excellent job on post-pandemic recovery in Canary Wharf. It's not what it used to be, but that's actually a good thing because the retail and services and entertainment side are very strong, and you're seeing a very significant increase in the life sciences and other tenants using the Canary Wharf estate. And for us, it's been our home for 25 years, and it will continue to be so.
David, are your clients banking differently to what they were like, 5-6 years ago because of AI, because of some of the technology, but also, I guess, because of the differentiation in some of the Wall Street banks?
They are banking differently because their business models are changing. So if you look at the effect of digitization, even before you get to blockchain or AI, you're seeing businesses being able to go global much more quickly. So that they can move through their own sort of use of e-commerce into very, very global markets very quickly. So they need a different type of banking services earlier in their development, not only the payments, working capital management, but insight into how to operate in markets before they build their own capability to do so.
So what does that mean? Being closer to your client in different jurisdictions? Does it mean actually hiring in maybe some of the places which is trickier for the clients to know exactly what's going on?
But both of those, but that's the footprint that we already have. So if you look at the opportunities, Middle East is a very good example, Africa, Latin America, they're places where clients are extending not only their own businesses, but also their supply chains. And that's something that we're set up to serve.
We have a big UK budget on Wednesday, probably the most important one for the Tories if they're not going to lose this election. What are you expecting in the budget?
Well, a lot of it has already been, I think, sort of pre-trawled because I think the Chancellor doesn't have very significant degrees of freedom. If you look at the UK budget is £1.2 trillion, and the estimates are that he has 20 billion pounds of freedom over the 5-year forecast period. So that's not a great deal of flexibility. So we anticipate there'll be some modest increase in tax take, but also most of that being given back through some relief for around national insurance and also maybe some of the lower tax rate relief. But that's not very significant when you're actually managing a £1.2 trillion budget, and really it's on the spending side where most of our clients would say, well, that's where the reform is needed, and that's where more clarity is required by this government or future governments. Yeah,
I was going to ask about the future government. I mean, if you look at the polls, it's very likely that Labour get in. Have you spoken to Labour? Have they come to speak to you? What do your clients worry most about a Labour government?
Our clients are always focused on policy and policy settings. And if you think about the UK, the issues are around competitiveness. They're around corporate tax rate. They're about labour productivity. And planning and infrastructure. I mean, they're the issues that our clients in the UK are most focused about, and that's what they engage with government, and I suppose we do too, on those dimensions. I mean, financial services reform has been very, very solid under the current Chancellor, but most of the Mansion House and other initiatives are longer term in their impact. But most of our clients are focused on what's the continued reform agenda in the UK.
What about non-DOMs?
Not that relevant.
It's not something that people are talking about, or it doesn't really make a difference to your client base?
No.
Okay. Are you bullish overall about the UK? I mean, there's so much dividing politics elsewhere in the world. I've heard that the UK looks relatively stable compared to other countries, and so does it make it attractive?
Well, you could say from a policy point of view, there isn't necessarily a huge gap between the major parties. But the UK retains all of its attractive features. Time zone, language, law, all of those things, but it can't rely on those forever, and therefore it needs to keep up this pace of structural reform in the economy to get growth back. And I think the distinctive thing in the UK to worry about is labour productivity. I think we're seeing other places in the world recovering faster post-pandemic than the UK has, and that's something that needs to be kept an eye on.
David, you mentioned a couple of times, the fact that Citigroup has a big global footprint.
Yes.
Geographically, where are you most excited about?
The United States, actually. I think the US remains that flexible economy. We've seen the level of recovery. You see it's being translated into stock market valuations.
And I think productivity.
And productivity.
Incredible.
Yeah. We'll see the jobs report later this week, but I think it is. I think that's a market where we still see very significant upside for generally and also for us at Citi.
And this is what animal spirits coming back, also for deals specifically in the US.
It's not just deals, it's that underlying economic activity and vibrancy, which does need financing. It needs the support that the banking system can give it, yes.
David, thank you so much for joining us today. You'll have to come back really soon. It was a great conversation with David Livingstone there, the Chief Client Officer at Citigroup. Now, coming up, we look at the animal healthcare industry with the Chief Executive of Zoetis. It's a listed company. We discuss vaccines, artificial intelligence, but also consumer spending. That conversation is up next, and this is Bloomberg. Now, the record run continues for global markets. Japan's Nikkei 225 tops 40,000 for the first time after another all-time high on Wall Street, while testimony from Fed Chair Jay Powell is in focus for investors this week. The U.S. says Israel has essentially agreed to a 6-week ceasefire if Hamas releases vulnerable hostages. American and Jordanian planes start dropping aid into Gaza. Plus, China is set to unveil targets and strategies for reviving the economy at the nation's top political annual gathering. But Beijing scraps the premier's press briefing, breaking 3 decades of convention. Well, good morning, everyone. Welcome to The Pulse. Happy Monday. I'm Francine Lacqua here in London. So Zoetis was a top buy amongst insurance companies last quarter, with shares in the animal health provider gaining 13%. The Fortune 500 company focuses on livestock and household pets by discovering and manufacturing vaccines and medicines. Now, the global pet market has surged since the pandemic, and according to Bloomberg Intelligence, it's projected to be worth almost $500 billion by 2030, up more than 50% from today. Well, I'm very pleased to be joined by the Chief Executive of Zoetis, Kristin Peck. Kristin, thank you so much for joining us. Welcome to London. I know you're here for a couple of days. I mean, when we saw what Zoetis did, so many in the newsroom said actually, if they had to start a business, this would probably be the thing that they would go into, because our relationship with our pets have grown so much. Have you seen the spend of household per pet also go up?
Yeah, I mean, it's a phenomenal industry with incredible macro economics, behind it. If you look at the industry, historically, it's grown around 5%. And Zoetis, as the industry leader through innovation, has actually grown about 3% faster than the industry over the last 11 years since we IPO'd. And with that growth, we've delivered 625% total shareholder return. So it's been really driven by innovation across our companion animal and our livestock portfolios.
Chris, so what does that mean in terms of how much you grow? This is innovation in vaccines and pet care. Is it also new business models? Are you launching into new groups? Because, again, we're talking off air, like, most people love their pets so much, unless there's a concern with household income, you give them the best.
Yeah, so if you look at it, over 90% of pet owners would, quote, pay whatever it takes to take care of their pet. And really what Zoetis has brought to that is a bunch of new products and new solutions. We're the leader in monoclonal antibodies for pets, so you see those in humans. And a lot of the same technologies you see in human healthcare, we've brought to pet care. So we have 2 osteoarthritis products, Librela for dogs and Silencia for cats, that you can get at your local vet. We make dermatology monoclonal antibodies, Cytopoint. We also do AI-generated diagnostics, such as our Images platform. So there's a lot of new products and new business models we're bringing to the animal health space across both companion animal and livestock.
I know there's always the cost of how much, of course, veterinaries, take. There are, of course, insurance models and things like that. But is that changing? There are more models now of trying to go for cheaper pet care, but then I guess more expensive solutions if the animal's actually sick.
Yeah, I think, pet owners really want to treat their pets the way they treat their family. And their openness to new solutions is quite different. You're seeing a lot now of insurance products, expanding, certainly in Europe, where you've seen insurance products really take over, because they want to make sure if there is a crisis and they need to get the best care for their pets, they want to make sure they have that available to them. But you are seeing pet owners engage in the health care of their pets in very different ways. They're spending a lot more time online. And as you look globally, their engagement in pet care and their willingness to spend on artificial intelligent diagnostics or monoclonal antibodies, just 2 examples, has really demonstrated that the market is truly expanding.
So is it cheaper to use actually AI solutions?
It's actually just providing better care. So if, for example, you take your dog to the vet and there's an Images platform there, we can look at urine, blood smear, and fecal, and in the same visit, give you a diagnosis. You don't even have that normally with humans. So we can even diagnose oncology and cancer at a vet visit and get your vet on the line with an expert pathologist to not just tell you exactly what it is, but potential treatment paths forward. So really, the quality of care that we can bring to the vet clinic is why pet owners are willing to pay. They feel their pet is truly getting the best pet care, and sometimes better than what they can even see for themselves.
But, Kristin, I guess, with the cost of living crisis, inflation at 8-9%, are you having to keep costs down? So is there, I guess it's a give and take, right? Innovation.
Yeah, I mean, we've polled people globally in over 7 markets and said, if we reduced your total income by 20%, how would that affect what you'd spend on your pet care? And pet owners wouldn't spend any less. We sometimes see when things are challenging, them reduce wellness care. Like maybe I can delay that appointment. Maybe I don't have to give all my parasiticides. But if their pet is sick, the fact of the matter is they're willing to spend whatever it takes.
So is there a mature market? I don't know whether you have, a geographical country that you see as the El Dorado for like a template for other ones.
You would think it's a mature country, but if you look at the UK in 2023, we delivered 12% growth in the UK. And that's organic growth. That is not through M&A. So this is my point on when you bring innovation to the market and when you can really improve the standard of care, pet owners are willing to pay. So, when we grew 7% last year, this year, our guidance is for 7 to 9% growth on the top line.
Do you worry about being an acquisition target for maybe some of the bigger pharma groups?
Well, I think with a market cap around $90 billion, there's not too many people who could probably afford it. So it's not our biggest concern. My focus really is on continuing to grow the company and really raise the standard of care and make sure we continue to grow that gap. We're growing 3% faster than the market in most of our competition. So that's where my focus normally is.
Kristin, I know we were talking about the fact that actually, the younger generation also have a different relationship to pets. Is it a stronger one? How is that going to shift in the coming years?
Sure. What's surprising to many people is 50% of pet owners are millennials and Gen Z, and they see their pets quite differently. I think when our parents had pets, maybe they were in the backyard, maybe they went into the house. These pets are now on the bed. They have shrinks, they have outfits, they have strollers. We're in a different relationship with our pets, and I think the millennials and Gen Z are really driving the increase in spend at the vet clinic, which the U.S. last year was 7%.
Where do you see the biggest market for you to grow?
We see it globally. We operate in 45 markets directly right now and actually sell in 100 markets across the globe. And we're seeing tremendous growth. Obviously, in Europe, in the U.S., I just got back from Australia, where we're growing, 17% last year, Brazil. So we're a very global company, and we see the growth of population. Adding 10 billion more people by 2050 means a lot more pets and a lot more people eating a lot more protein. So the macroeconomics that drive animal health are very strong.
Where are the biggest margins, actually? Is it, when you look at, I guess, the pet care in general, and that could be nutrition?
And generally, the pet care margins are higher than our livestock. We primarily make medicines, vaccines, monoclonal antibodies, diagnostics, so we're not in the sort of food nutrition side of the business. Generally speaking, pet care is a higher margin than our livestock business.
But could you go into nutrition, or is it just not an attractive market at the moment?
Our focus is really more in things that have intellectual property. We have, we spent over, $4 billion since we IPO'd on our R&D. And I think we really look at things where we can, create intellectual property and really differentiate and drive innovation. So in spaces where you see that, and obviously healthy margins, as you know, for us, those are spaces we focus on.
Any acquisitions?
We've completed a bunch of small ones, actually, in monoclonal antibodies. Petmedics was one, Adivo was one. So our real focus, as I said, is really on these emerging technologies that are going to drive innovation into the future.
Kristin, thank you so much for joining us today. What a great conversation. Kristin Peck there, the Chief Executive of Zoetis. Now, coming up, we'll take a look at how changing consumer habits and climate concerns are also weighing on the coffee industry. So we go from the pet industry to the coffee industry. That's a perfect Monday Pulse. That's next. We speak to the Illy chairman, and this is Bloomberg. Now, some of the world's biggest coffee exporters are being transformed into net buyers as a consumption boom in Asia's markets drives local demand. While changing consumer habits, the impact of inflation, and supply chain challenges are weighing on an industry which is also grappling with the effects of climate change. Also on the radar, far-reaching new European Union rules aimed at preventing deforestation. So let's discuss all of this with Andrea Illy, the chairman of illycaffe. Andrea, thank you so much, as always, for joining us. We know you're brilliant. Most of our people in the newsroom, but also are watching at home, are obsessed with coffee, and I'm putting myself into this category. So we'll have a good conversation on trends in coffee drinking, but also deforestation. You, from a very long time, have worked on agricultural ways to be fairer. What do you make of this new deforestation law from the EU?
Well, the deforestation law, so first of all, good morning, Francine. Pleased to be here. The deforestation law is impactful in a sense that it puts regulations instead of incentives, which are difficult to match from producing countries because they are not equipped technologically to provide the geographical coordinates and full traceability that the European Union requires in such a short time. But I think with a lot of work and private investment and support, we will be able to, at least for the majority of countries, to make it. Yeah. And this is positive in a sense that it will kind of certify that coffee is not grown in deforested areas. Yeah. Although, my very personal opinion, it is already not grown in deforested areas. So I'm a little bit perplexed with the evaluation of the European Union, which considers 7% of the coffee grown in deforested areas, whereas in my, let's say, figures that are more or less around 0%.
But so where do you see the mismatch? Are they counting deforested areas differently?
Yeah, it's difficult to count because many regions where coffee is grown in Africa are not traced. So how can you really make an assessment with satellites? But satellites are not fully reliable, let's say, technologies. You need to combine satellites with a local, let's say, foot on ground, let's say, check, yeah, which is being done now. So it's very complex, but eventually I think it will happen.
So you don't think there should be a delay, actually, in this law?
Of course, there is a request for delaying because yeah, they have a strong impact, but I think the European Commission is pushing back. Yeah. So we will be able to make it. The easiest way is to make a good compromise about the yeah, level of, let's say, of the detail of the traceability which is required. So this is something on which the European Union did not provide the details. Mm-hmm. And this is where there is the negotiation, let's say, space to find a decent compromise.
Andrea, and you've been thinking about this for quite some time to try and make actually agricultural ways more sustainable, right, more environmentally friendly. Are you worried that we're in a period where we care less about green technology and doing good for the environment because of the number of crises we face?
So, yes, coffee is dramatically impacted by climate change. Up to 50% of the currently suitable land will not be suitable any longer as a consequence of climate events by 2050. But two good news. First of all, regenerative agriculture proves to be successful, not only in becoming more resilient to climate change. You literally nourish the soil with organic carbon. So the soil biodiversity produces fertility, water retention, and also defenses against pathogens. Great. So you get rid of most of the fertilizers, most of the pesticides, everything. And on top of this, you maintain productivity, but with lower cost, yeah, and quality is amazingly higher.
But it's more expensive.
No,
to start with, it's not more expensive?
No, more expensive.
So why have people delayed putting that in place?
No, they don't delay. They are skyrocketing. So we launched this regenerative framework in 2018, and with our great satisfaction, already 80% of the growers working with Illy adopted regenerative practices. And cherry on the cake, the last Ernesto Illy International Coffee Award has been won by a Brazilian coffee lot, regenerative.
So this is for Illy. I mean, you have a whole, there's a whole.
This is not only for Illy because other companies are doing the same, following the same path. So it's becoming a trend. And the other positive aspects, completing the answer to your question, is that there is now an awareness that we need development funds. We need to create a coffee resilience fund in order to invest $10 billion in the next 10 years in order to, let's say, adapt the coffee plantations in terms of improving agronomical practices, possibly regenerative or similar, and also renovating the plantations with more younger and more resilient plants.
And Andrea, overall, I mean, there's always, reports saying, they have concerns about child labor in the coffee industry in general, not necessarily Illy. But are you happy with the way practices are going? Are they fairer, and are they better than they were 10 years ago?
Things are continuously improving. I must say that all these fair trade and certification schemes like illycaffe and others, Rainforest Alliance, did create a lot of, let's say, benefit in terms of this kind of social issues. But also this legislation that is coming from the UE is, let's say, enforcing aspects like child labor and social conditions. So this is going in the right direction.
Andrea, how are coffee tastes changing? So we had this report saying that Asian countries are going to drink much more coffee again than they did 5-10 years ago. Are our tastes changing in the kind of coffee we want to drink and taste?
This is a trend, the decommoditization of coffee towards much more premium taste and gourmet coffee, prepared usually espresso. So the origin of the taste, let's say, is the Italian espresso, then could be with latte, cappuccino, or others. This is a trend we started 20 years ago, also in Asia, and which is continuing. So more and more micro roasters, more and more coffee shop chains, more and more micro lots and farms producing premium coffee. This is now, let's say, a robust trend of growth, and the gourmet coffee segment conquers more and more space on the top of the pyramid, which is, I would calculate now at least 12% of the coffee being gourmet.
So I think last time you were on, you said, Illy could be looking at a possible IPO in 2026. Is that still on the cards? Is it something that could happen?
Absolutely. So this is a necessity because we have a private equity fund, our very good investor, Ron Capital. They will have an exit, and by default, the exit would be the IPO. But this, in our case, is consistent with the model of a kind of a world-class organization, like I like to describe. A family-controlled business, but a business, let's say, a management-led business, which is the best combination of both. And for that, let's say, challenge, the company is continuing progressing, organization-wise, performance-wise, improving our, financial ratios. We're just launching an extraordinary investment plan for doubling our production capacity, but also developing new products, much more innovative and also consistent with this regenerative model. So everything is in progress and positive.
Andrea, I have like 35 questions from viewers asking me, is it okay to have a cappuccino after midday? This is the only question that really is worth answering.
Typically would replacing a dessert after lunch. Typically,
cappuccino?
Cappuccino, many people do it, particularly in the States. Maybe people feeling that there are less calories, you get the combination of dessert and coffee at the same time.
So there you go. This is big news. Andrea Illy, thank you so much, as always, for joining us. That was the chairman of illycaffe. Coming up, for the first time in 3 decades, the Chinese premier is skipping a press briefing at the annual NPC political meetings in Beijing. We discuss what it means for investors and what it means for policy next. This is Bloomberg. So China's most important political gatherings begin in Beijing a little bit later today. Now, leaders are set to unveil their targets and strategies to revive the economy. But the Premier, Li Qiang, will not be holding a briefing at the close of the annual National People's Congress. Well, Bloomberg's Rebecca Chung joins us now live. So, Rebecca, surprise move by the Premier. How unusual is this?
Well, it's certainly a big decision. As you say, we have been having these annual briefings by the Premier every single year since 1993. And one reason why it's such a shock is that for people in China, it's really the only opportunity they get each year to see China's number two in a more sort of unscripted, candid and human light. And it's worth saying that's in part because of how previous premiers have used this as an opportunity. So Li Keqiang, who's the predecessor for the current Premier Li Qiang, he used to joke with reporters, he used to joke about his own strong Anhui provincial comment and accent, and he also once triggered this nationwide debate about poverty. So it really was this chance to speak directly to people. And I think cancelling the briefing is an important signal about how Xi Jinping intends to proceed with his third term, eliminating this opportunity, this one channel to speak directly about policy-making decisions, as well as also quite significantly diminishing the importance of that role of the Premier within China itself too.
So what will investors be watching for, Rebecca?
Well, the one really big item is going to be the GDP target. That is the big thing that investors watch every year. Consensus is that we will see it somewhere around 5%, but the thing that investors will be looking for is the type of language around that 5% target. Just how hard, just how convincing are they? Are they policymakers going to say, we absolutely will make this at all costs, or might they be a little bit looser around their language? And of course, anything that comes below 5% is going to be a disappointment for the market.
So what are the expectations for fiscal stimulus?
Well, provided that we have that 5% target, that is going to be tougher to reach than it was last year, because last year we were coming off that low base. China was rebounding and we were reopening. And so the expectation is that to get to that kind of level this year, we would have to see fiscal stimulus enforced more swiftly and also enforced more forcefully. Particularly, we would also be watching quite closely for any other kind of support for the property market, which continues to be, of course, a real drag on the Chinese economy.
Rebecca, thank you so much. As always, Bloomberg's Rebecca Chung-Wilkins. Now, we're also looking at Macy's jumping pre-market after Ark House Management and Brigade Capital Management boosted their offer for the company by 14%. That's after the retailer rebuffed a previous proposal. Now, Macy's in January rejected the bid from the investor group, saying the offer lacked compelling value. Up next, Bloomberg Brief with Danny Berger and Manish Krani in New York. We'll have a full roundup, of course, of markets. We had a big day on Friday where we saw record highs, and then Bank of America saying they expect a lot of the U.S. indices to still go higher. So a full roundup of a big data week and markets. This is Bloomberg.